The Federal Open Market Committee meeting and the upbeat report from the U.S. Department of Labor made the currency and commodity markets highly volatile. The oil market's short-term roller coaster ride ended at $84 per barrel. In fact, the oil market returned to normal one and resumed its gradual decline. The energy crisis seems to have survived its acute stage. Gas prices in Europe are below $1,000 and will hardly rise above. This means that oil prices will most likely spiral down in the midterm. Meanwhile, Brent crude oil futures have begun to recover from last Thursday's decline. Currently, the benchmark is trading above $83.80 per barrel. Moreover, it has every chance of rising above $84. Analysts attribute this to the fact that Saudi Arabia's state-owned oil and gas company Saudi Aramco has raised its November official selling price for its crude for buyers in Asia, the United States and Europe. However, the quote is unlikely to settle above $85, as there are no market factors for that. As for the situation in the foreign exchange market, the ruble ignored the general trend again, while most currencies were losing ground against the US dollar amid optimistic statistics from the US Labor Department. The Russian currency was gaining in value. However, there is a simple explanation for such dynamics. Ahead of the Fed meeting, the ruble tumbled. Thus, the market simply offset the imbalance in the oversold asset. Against this background, the ruble will hardly extend gains. With the lack of new drivers, the Russian currency is likely to trade sideways or decline slowly. In the meantime, the trading chart shows the dollar-ruble pair has pulled back slightly. Taking into account the current trend, the ruble may well continue moving down. However, the Russian currency is already trading below the support level of 71.40 rubles per dollar. Therefore, a scenario suggesting a gradual strengthening of the ruble cannot be ruled out. The Fed meeting also affected gold prices. After the regulator announced its decision to start tapering bond purchases and revised its plans on the time frame on when it would next raise interest rates, demand for the safe haven asset increased. The US stock indices went up again despite their overbought status. As a result, investors shifted their focus to gold. Thus, the precious metal, as the main safe haven asset, now has a great chance of extending gains. Gold finally stopped standing still and headed towards its local high, posted on October 22. If the price consolidates above $1,835 per ounce, gold will most likely continue its bullish run. Otherwise, fluctuations in the area of $1,825, $1,835 may lead to a technical pullback. Well, the Fed meeting has had a severe impact on every trading instrument. However, excitement has already fizzled. Now the markets are likely to enter the phase of stability in accordance with the decisions taken. And that's all for now. Thank you for watching and stay tuned.